And we are live. Thank you everyone for joining. If you guys can hear me and see me, please just leave a comment so that I get to know. Cool. All right. Thank you everyone for joining. So my name is Akshay Singh and I'm the community manager at CoinDCX. And this is the 8th session or the last session of our Crypto Basics series. Crypto Basics is where we have taken you through all the essential tools and tips for starting your journey in cryptocurrency right from the scratch, right? And be it talking about how to get started in terms of researching your cryptocurrency, how to get to know about it, what all things that you need to look into it, right from the team's background, the project's overview, right? What the project mathematical metrics looks like, or the numerical metrics looks like in terms of circulating supply, the volume, the trading exchange on various exchanges that they are listing at, or the community activities or the developers activities and stuff like that, right? So what we have covered in the last 7 sessions is pretty extensive, right? And this is for the first time if you are here on the Crypto Basics session. Please do check out the previous 7 sessions wherein we have talked about all the things in details, things to consider, ways to minimize your risk, uh, how to analyze any crypto technically, how to read price charts, right? Where to get started from, and all of that information that you need in your kitty in order to excel in crypto when it comes to cryptocurrency investment and analysis, right? So do check out the previous sessions. Today is the last session in Crypto Basics series, but fear not, we will come back again with a revised series going forward, and we'll share the details with you pretty soon. Now, in the last 7 sessions that we have done so far with you guys, right, we have received quite a lot of feedback and we have received quite a lot of queries as well, right? There was a there was a feedback form which was available in the description of every session, and we have received quite a lot of feedback from all of you guys. And in today's session, we will go through all of those questions that you guys have shared with us. We will answer them one by one. And for those who are available on this live session, who are joining, taking time out and joining this live session, feel free to drop any question that you feel like you want to know about or you want to learn about any cryptocurrency in the comment section or in the live chat here, and we will pick that up one by one as we go forward, right? So let's kickstart today's session and jump on to the first question. So the first question that we received, which is from Bharat Kaushik, right? It is, what is better, trading or investing, right? So the question is, what is better? Is it trading, which is better, or investing? So Bharat, in order to answer your question, trading or investing, uh, both have their own pros and cons, right? And it depends on what your style is. When you have to invest your hard-earned money, then what your style is mostly all about, right? So what trading is that trading requires a lot of dedication. As both of them, investment or trading, it requires dedication, right? But trading requires most of your time that you have to spend upon analyzing charts. And trading is usually, carried out in a very short period of time. It can be days or it can be weeks, right? You can place a trade on a daily basis or you can place a trade on a weekly basis, right? But in any given construction or in any given scenario, you'll have to carry out a constant analysis of the charts, and you have to stay on top of trends or the news or the events that are taking place in any particular project. While when it comes to investing, investing will eat up or will consume a lot of your time in the initial phase, wherein you have to analyze the fundamentals. You have to research about the team, whosoever is behind the project, right? You have to get into the nitty gritty of any particular project, and then what you do is, once you have come to a conclusion that, hey, this XYZ project is suitable for my investment style and I want to invest in that, you can just go ahead and invest it, which will span out, or which will come to a fruitful conclusion, or a fruitful profitable, which will become a profitable investment over a long period of time. So trading will take your time day in, day out, wherein you have to pay attention to what the market is doing, how the price is moving. And when it comes to investment, it will usually be spanned out across months, if not years to come. And you do not have to pay frequent attention once you have done an initial solid research. All that you have to do is just keep a check on the project time to time, whether they are following their roadmap, they are progressing in terms of development, and the community activity keeps on growing on that project, and that so forth and so on. So it depends totally on your style. And be it trading or be it investment, right, over a definite period of time or over a long period of time, both will more or less yield, or like both more or less will result into the same level of profit, or into the same amount of profit that you will make. So I hope that answers your query, and we'll move on to the next query, which is by Pradeep Singh. And the question is, I'm new and don't know anything except spot buy. I want to learn more about other things like margin, uh, and so forth and so on. So how to go about that? So Pradeep, it's really good to know that you have curiosity and you want to learn more things. So spot market, as you know, it is a 1:1 market, right? Wherein I'm the seller, you are the buyer. For example, I'm the seller, you are the buyer. Whatever asset I have, I will sell that to you. And if you have a demand higher than that, or if you're looking to buy more than that, you will place your order in the market, which will stay open, which will stay in the pending state. And until unless some other seller comes to sell that asset to you, your order will stay in that. So what is happening is that 1:1 trading is taking place. Wherein in margin, what happens is, uh, you trade on the derivative of any particular asset, right? And you can actually borrow margin, or sorry, borrow leverage from the market or an exchange. So just to share a quick example, say for example, I have 100 rupees with me, which I want to invest, right? But I am certain that the price of any XYZ cryptocurrency is due to go up, right? Or it will shoot up, right? So if I'm very positive on that, I might want to invest 200 rupees and make gains on that, right? But since I do not have that amount with me, I only have 100 INR with me. What I can do using margin is that I can borrow 100 rupees from the market, uh, specifically from an exchange, right? I can borrow 100 rupees from an exchange, and I can go ahead and place my order on a margin market. So I've taken a leverage from the exchange of 100 rupees. I had 100 rupees of my own. So now I have opened a position for 200 INR, on which, where if I'm certain that I will make some gains, say for example, the market is about to move 10%. If I've just invested 100 INR of my own, I'll end up 10% of 100, which is 10 rupees on that trade. If I'll take leverage from an exchange, if I'll open a position on margin, then since my order placement amount or my trade amount is 200 rupees, I'll make a 10% of that amount, which will be 20 rupees, right? So you will see that, instead of 10 rupees, my profit has increased to 20 rupees. While I'm mentioning this, do also keep in mind, if your position goes in negative, right? If the trade goes in negative, and instead of the price going up, the price goes in the opposite direction, right? If the price goes down by 10%. Now, since I had only I only had 100 INR with me, and I placed a position on that, I opened a position on that, a trade position on that, I will only incur a 10% loss on 100 rupees, which will be 10 INR, right? If I'll take a leverage and open a position on the margin market, right, wherein I've opened a position with 200 INRs on the market, right, then I will get a 10% loss. I'll face a 10% loss on 200 rupees, which will be 20 rupees. So as you can see, whenever you are taking a leverage on the margin market, if your profit is increasing by, let's say, 100%, instead of making 10 rupees as a profit, you are making a 20 rupees profit. So as well will be the true for loss as well. If you are making a 10 rupees loss, if you were about to make a 10 rupees loss with your initial investment, and you took a leverage from an exchange and you doubled your investment amount, then you will face 100% loss on your invested amount as well, or on your loss as well. So instead of 10 rupees, the loss will be 20 rupees. So I hope that answers your question, and we'll move on to the next query. So the next query is from Ashwini Patil, and Ashwini is asking, would like to learn more about making an analysis in a shorter period of time. So Ashwini, whenever you have to make any analysis on any crypto in a shorter period of time, right, you will need to select the chart. Okay, you'll need to select the time frame for that chart depending on that duration, that on whatever duration you are analyzing it. Say for example, your short term duration is 4 hours long, right? Then on your chart, be it on TradingView, be it on CoinDCX exchange, the time frame that you will select, that will be 4 hours. Okay, you'll need to select the 4 hours chart so that you can analyze the peaks, resistance, and the trend lines in accordance to a 4 hour chart. And doing so, you will be able to analyze things on a shorter time frame. So on a shorter time frame, make sure to select the time frame depending on whatever duration you want to trade for, and then apply all the all the technical indicators, be it MA, be it RSI, right, be it your support and resistance, be it your trend lines, in accordance with that time frame, so that the chart will tell you the analysis for that particular duration, and you can make an informed decision on your trade. So I hope that answers your question. And the next question is, when to exit a purchase, long-term coin, when to exit a purchase, arbitrary options, long-term coin, and investment. So it's a combination of couple of queries in one question. And this question came in from Shyam Vyas, right? So it's a very good question, when to exit a purchase. And this we covered in our fifth, or I believe in our sixth session, wherein we were talking about mistakes to avoid when you jump into any cryptocurrency investment or a trade, right? You need to pre-plan your exit before getting into a trade. You need to pre-plan it. By that, what we mean, or what I mean, is that sorry. So what I mean by that is that whatever cryptocurrency that you are going to invest in or trade into, right, do make sure that before opening a trade, you have a set amount at the back of your head. You have done your analysis, you have done your past price analysis and all of that. You know that this XYZ cryptocurrency moves in a ratio of 100%, moves in a percentage of 100%, 200%, 300% in a particular rally or in a particular set. And as soon as that target is met, exit that position, right? Whenever your target has been met, be it 100% gain, 50% gain, 200% gain, whatever that is, exit that trade, right? Do not get greedy. Do not think that, okay, if it has reached 200% growth, it might move on to 400% growth or 300% growth, and you will make more on that. It can certainly do that, but it can go, in a negative position as well, and then you will end up capitalizing on the 200% gain that you have done. So make a pre-calibrated move on that, and always calculate your exit prior to entering into the market. Now, another thing that Sham has asked is about long-term coin and investment, right? So, if I have just to, if we just have to name any particular coin, or like have to just name any particular coin in that sense, then Bitcoin or BTC is one of the asset which has been time and tested, is there in the market since 2009, right? And if you look at a long-term trajectory since 2009 till 2021, Bitcoin has, like, not just given tremendous gains on your initial investment. It is a proven steady history of price movement, of steady price increase, and giving you good returns, right? So Bitcoin is definitely one. Apart from that, any coin that you want to pick up out of the entire cryptocurrency market, you will beat whichever coin, right? Even if Bitcoin is there, right? Even before you jump into Bitcoin, it does require you to understand what Bitcoin is, right? You'll need to understand the fundamentals, right? Then when to enter Bitcoin, like that is also a question, right? You can enter Bitcoin at $60,000 price, or if you have been very careful, you have studied the charts, you have analyzed the price movement in the past as well, then you might be waiting even now for Bitcoin to dip further, or maybe accumulate at 30,000. So even that becomes a really crucial question, right? Just simply saying that Bitcoin is a long term, like it's a really good investment, doesn't absolve you from not doing your research on it, right? So you'll need to do your research when it comes to fundamental or technical research on any coin that you want to look into, or any coin that you have to jump into before get like jump into in terms of trading or investing from a long term perspective. And for that only, like, we did this entire crypto basic series of 8 episodes. This is the last episode, guys, and wherein we are doing a live Q&A. So if you have missed the previous sessions, do check out the previous 7 sessions that we have done. We have taken we have taken all the tips and the basic tools that you need in order for you to excel in the cryptocurrency industry. So please do check it out. Now, the next question is, long-term philosophy. So again, it's a combination of couple of things, and this is from Mr. Banerjee, right? And the query is around long-term investment philosophy, future of cryptocurrency, risk part of investment, and how my coins are in safe custody, right? So let's talk about it one by one. So first thing is long-term investment philosophy, right? So your long-term investment philosophy, or better rephrase it to long-term investment strategy, right, should involve a very deep fundamental analysis or research of any cryptocurrency. And when we say fundamental analysis, it means you know what the project is about, you know who's the team behind it, what their goals are, how they are looking to achieve those goals, how their community looks like, what is their community engagement looks like, and how many developers are engaged or contributing that particular project. That's the basic of fundamentals, right? Then when it comes to your long term investment strategy, if you are not really good with technical analysis or the price chart analysis, then do make sure that you average out your buying. Whenever you have to buy that particular cryptocurrency, do make to average out your buying price, right? Which is called dollar cost averaging, or you can call it rupee cost averaging, which is nothing but a simple technique wherein, say, for example, you have decided that in the entirety of your investment journey in cryptocurrency, you are going to invest 10,000 rupees in the cryptocurrency market or in any crypto asset, right? So instead of investing those 10,000 rupees in one go, you can divide those 10,000 rupees in 10 equal parts or 20 equal parts, right? So you can invest 500 rupees every month, or you can invest 1,000 rupees every month, right? Or you can invest 500 rupees every week, or 1,000 rupees every week, right? So doing so, what will happen? Say, for example, when you came into the cryptocurrency industry and the price or the market is in a bearish run or the price keeps on decreasing, right? Then since you are, you have expanded or you have, you know, uh, increased the time frame during which you are allocating all of your investment into the market every month or every week. Say for example the price keeps dropping every month, every week, right? Then instead of you accumulating any crypto asset at the highest price or any XYZ price, your buying will be averaged out, because first you bought at a certain level, then the price dipped and you bought it at another level in the next month, and so forth and so on, right? So you will see the entire average of your buying price will reduce quite a lot. Then do make sure that whatever you are investing in any XYZ asset, right? Though it's a very popular saying in the cryptocurrency industry that never invest more than you can afford to lose, right? It doesn't mean that whatever you are investing you are going to lose, right? Just to add on to that, do make sure that whatever you are investing in cryptocurrency industry, in any crypto asset, that is an amount or a portion of your savings or whatever, is something that you do not need on an urgent basis, right? And just to touch a little bit upon that, what do I mean by that? Say for example you have invested 10,000 rupees in Bitcoin. Okay, this month you have invested 10,000 rupees in Bitcoin. Next month, say for example for any XYZ reason, right, you need to take that money out from the market, but the market is, market has fallen further, Bitcoin price has gone down below from whatever it is trading at right now. Then even though you know that, okay, this asset might bounce back in the future or Bitcoin will retrace and you will not face any loss, but due to urgency that you need that fund, if you'll have to withdraw that fund, right, you will need to withdraw that fund, then you will be selling your crypto asset in a loss and you will end up losing money. So whatever money you are investing, do make sure that there is buffer involved in that, and you have taken that time frame, whatever it's going to take, be it 6 months, be it a year, be it 2 years, you have taken that into consideration, that for this duration you're not going to need that fund back on an urgent basis. Okay, so that is these are the couple of tips which will definitely help you out for with your long term strategy. Then the next part of this his query or this question was the future of cryptocurrency, right? So this is a very vague question, and this is a very frequently asked question as well, right? Now, when you talk about future of cryptocurrency, right, you need to, you really need to understand what cryptocurrency is in the first place, and why is it there, why is it even there in the market, right? What is the purpose it is serving, why is it created, right? So once you will understand the entire piece, wherein a cryptocurrency, some say that it is a better form of currency, some say it is a better form of financial market, and so forth and so on. So every other institution or every other influencer or every other person, they have their own understanding of the market, what the market is, right? Some say it is a it is a very good technology in order to record data and store data in a very transparent way, right? It has multiple applications to it, right? So once you will understand the entire concept of what the cryptocurrency is and why is it created in the first place, why is it existing in the market today, why there is such a hype around cryptocurrency globally, right? Then you will definitely will be able to analyze or come to a conclusion how the future might look like or how the future looks like, right? And looking at what we have today in terms of the information available, or the trend that we have seen so far, right? Cryptocurrency, or not cryptocurrency, but blockchain in general, it's a very powerful tool or technology in itself, right? Which is solving quite a lot of issues that we have in our uh, daily lives. If not in our daily lives, in our modern, in our traditional infrastructure that we have in the institutions and around the organizations, the way the data is dealt, the way the value is transferred from one person to another, right? So they, that tradition, the blockchain as an industry, it makes the entire infrastructure more efficient, right? And any technology or any technology or any industry that makes any other piece of institution infrastructure more efficient, right? As long as it keeps on serving that person of that perspective or that goal of making things efficient, it does derive some value out of that uniqueness or out of that ability of being more efficient and more advanced, right? So depending on that, future of cryptocurrencies or blockchain in together or in general does look efficient on the basis of the problems that the technology is solving. So far it has solved, and the problems it is looking forward to solve going forward in the future, right? Risk part of investment, so that is something that we have pretty much covered uh, in this particular talk, wherein uh, do plan your exit, right? That is also a part of your risk, right? You need to plan your exit, because sometime it can happen that you have taken a position in any particular coin, maybe due to hype, maybe by getting influenced by any major influencer or any personality. The coin did show you gain, but you didn't take the profits out, and then after that the price started plummeting, and not just you lose, you lost your gains that you made, but now you are in negative from the amount that you invested in that particular cryptocurrency, right? So planning your exit is must. Then when it comes to risk, right, there are cryptocurrencies out there, or there are projects out there which can give you like close to 80%, 90% negative portfolio value. It is possible, so you need to be aware of those risks as well, right? There are coins which are called usually shit coins, okay? So that is a term that is used, like coins which are not really that great, right? They can give you significant losses on your portfolio, which you might not be able to recover back from those coins. That is one type of risk. Another type of risk is getting scammed. And when I say getting scammed, scam can come in multiple ways. Okay. It can be that somebody has approached you on Telegram, on Twitter, and they approach you with the very good pitch, wherein they are saying that, hey, invest with us, or trade with us, and we'll get you 50% gain, or we'll double your portfolio, or you just invest 500 rupees and you'll get 5,000 rupees back by the end of 1 month or within 3 months. Whenever you are approached with with such kind of promotions, right, stay away from that. Those are usually scammers trying to scam you out of your hard earned money. That's one type of scam. Another type of scam can be an MLM scheme, pyramid scheme, like multi level marketing scheme, wherein you have become a part of a website or a group, wherein they tell you that you will earn interest on your cryptocurrency on a daily basis. But what you need to do is just keep on referring more and more people, or keep on adding more and more people to our network, right? So be aware and be wary of those schemes. They can they are very prominent scams. They can run away with your hard earned crypto, hard earned money at any point of time. So that is a risk that you need to take into consideration as well, right? Then another risk which most of the beginners are not familiar with, but you should be aware of, that is that there is a very popular saying in crypto: if not your keys, not your crypto. What does that mean? Is that you should hold your crypto in your own personal wallet. Okay, and your personal wallet will provide you with a key. It'll be a long alphanumeric string, like your cryptocurrency address, and you can use this key. Even if you lose access to your phone, your hardware, or your desktop, or to your wallet, you can use this key to retrieve your assets straight on the blockchain or directly from the blockchain. And that way you will always have the access to your crypto assets, right? So do make sure to keep your crypto assets in your personal wallet, and always store your private keys very efficiently. Okay, so these are some of the risks attached that you should be aware of, and I hope this answers your query, Mr. Banerjee. Now we'll move on to the next one. Basic points to consider: which coins to buy and the amount of the same, by Rohit Saha. So Rohit, I know that this query came in from you in the very first session, but since that session we have covered basic points that you need to consider. How will I'll touch upon that. Be very thorough with the fundamentals. Be very thorough with the technical analysis and the read the price charts of any particular coin, and do not invest more than you can afford to lose. Okay, that goes without the saying, that do not invest anything that you can afford to lose. Okay, so these are some of the basic points that you need to consider, and always pre-plan your exit and pre-plan your trade. Not just the exit, pre-plan your trade as well. Moving on to the next one: how much to invest and at how much profit we can satisfy ourselves, by Hansraj Power. So again, Hansraj, do not invest anything more than that you are happy to lose or you can afford to lose. And when it comes to how much profit you can satisfy yourself, it totally depends on what your expectation from the trade is. Being said that, always carry out a price analysis or the past trend analysis by reading the price chart of any particular coin, and see how much gains in a particular set of a rally, how much gains any particular cryptocurrency has provided to anyone in the previous history, in a particular duration, or in any particular bull run. And doing that analysis, you can come to a conclusion that, okay, I might be satisfied. I will satisfy myself with 100% gain, with a 200% gain, the 300% gain, and so forth and so on. Now, moving on to the next question: difference between cryptocurrency and blockchain. How blockchain work? What are the different products in crypto trading, and so forth and so on. And the question is from Mr. Yog. So difference between cryptocurrency and blockchain is the underlying technology. And to break it into very simple words, uh, think of blockchain as a software. Okay, think of blockchain as a software, and this software does nothing but it records transaction. So blockchain is a digital ledger, or a decentralized, or not centralized because then it beats the purpose, but it is a decentralized ledger. Okay, wherein all the transactions or all the data gets stored in a very decentralized manner. That is what blockchain is. Cryptocurrency is more or less like a file. Okay, a file that stays on top of that software. Okay, so say for example, MS Word is a software, right? And any document that you prepare on that MS Word, that will be saved as a file, right? So think of that comparison in that way, right? So a blockchain can exist independently without any cryptocurrency, but a cryptocurrency cannot exist independently without a blockchain. Cryptocurrency does need an underlying infrastructure upon which it can be transferred from one person to another person, or from one place to another person, to another place. And that underlying infrastructure is blockchain. So blockchain is more or less like the code that defines the ecosystem or the network. uh, it's the software which consists of codes, and it can be programmed or customized as per the organization, institution, or the government's need, or whosoever is developing that as per the developer's need. And cryptocurrency is the transfer of value. It's the coin, or it's the file which enables the transfer of value on that ecosystem or on that network, is what cryptocurrency is. Now, so how blockchain works? So the way blockchain works is, in a decentralized environment, right? Once a code is out, once the blockchain network is out in the open, right, and the network is running, anybody can come and join that network and become a participant of that network, right? The way they can do that, or the way they can join that network, is by simply running a code, or a node. It is like, most commonly it is called a node. By simply running a node on their laptop, on their desktop, on their server, right? And a node is nothing but a piece of, again, a piece of software that you will execute on your end, on your desktop, laptop, or your server, which will connect your laptop or your system directly with the blockchain network, right? So it is customized in such a way, that node is customized in such a way that you have to provide certain information while running it. And once you have executed that particular node, right, your system will be connected with the blockchain network in itself directly, right? And then any and this can happen, like anybody can join. When we say anybody can join, like literally millions or thousands of people can join the network, right? And everybody can join the network. And once everyone has joined the network, or even if it's just you who has joined the network, you will receive a copy of all the data which will be stored on your system, right? You will get the blockchain data copy, on which will be stored on your system, for every data that will be entered on that blockchain, every transaction that will be entered on that blockchain. Now imagine it in this way, that I have a piece of code, you have a piece of code, and so sorry, I have a piece of data, you have a piece of data, and so as thousand other people in the network, in the ecosystem, right? Now if anybody has to, maybe make some changes to a data, say for example, I am an ill actor, okay, or I am a nefarious actor, I want to, manipulate the blockchain, and then just go ahead and say that, hey, Akshay Singh has 10, or maybe 100, or maybe 1,000 bitcoins in his wallet, right? If it is just me keeping the track of that data, holding that data, I can just go ahead and update that data, and I can trick the system into thinking that Akshay Singh has 100 or 1,000 bitcoins in his wallet, and I can then go ahead and spend it, right? But now imagine there are 100,000 plus or a million participants in the market, and every participant has a copy of that data with them. Even if I'll update the data on my end, it will not make any difference, because 100,000 or thousands of, or 100,000 plus other members who are a part of this network, they will reject the data that I will submit, right? You can cross verify it with 1,000 other people, because the data is with everyone. So in order to manipulate the blockchain, I will not just have to manipulate the data on my end. I'll have to hack into the system of 100,000 plus members, and update the data on their system as well, which becomes really hard and tricky to do so, right? So this is how blockchain more or less work in a very simple way, right? It stores your data on the network, and anybody can connect to that network, and whosoever connects with that network, the data gets distributed to all of them, and everybody maintains a copy of that data. It's a very lengthy topic, to be really honest. We can go on and on, but we'll just keep on moving further. And what are the different products in crypto trading? So in crypto trading, there is spot market. You can do spot trading, which is one-on-one trading that you do. Usually you go to any exchange, that is what you see, what it is called as a spot trading. Then there is margin trading, wherein you take leverage or you borrow funds from an exchange, you open a position, and then you place your trade and make profit or loss on that. uh, Moving on to the next question. Why USDT coin price varies in Indian exchange? Why is it not equal to $1? By Gokul. Very great question, Gokul. So as you guys must have seen that when you check the price of a Bitcoin, right? Or if not even Bitcoin, if you check the price for US dollar on Google, right? It will tell you the price is around 74, 75 rupees at the moment, right? But if you go to any Indian exchange, right, and you check the price for USDT, not dollar, but USDT, which is a digital representation of US dollar. Sorry, by digital I mean which is a cryptocurrency created as a stable coin, which is pegged to US dollar, which is based upon US dollar only, right? You will see the price of USDT will always be higher, right? That is simply because USDT, like the token in itself, has a very limited supply as compared to US dollar. Okay, US dollar has trillion plus dollar supply, circulating supply in the market, right? And USDT, the token which which is there in the market, if I'll just check currently, it has a circulating supply of close to 61 billion tokens, right? So only 61 billion tokens are available in the market, right? Now, not every exchange can, or let me put it this way, every exchange can only get access or accumulate a limited uh, amount or a limited part of that particular cryptocurrency, of that particular token, right? Because it is limited in number, right? There are 100 plus exchanges in the market, right? And every exchange need a certain amount of USDT on their platform in order to facilitate trades, right? In order to maintain liquidity. And if since the currency is limited in number and the demand for that cryptocurrency is quite high in the Indian market, right? The price tends to vary, or you will find it a slightly on a premium in the Indian market. So say for example US dollar is 73 rupees or 74 rupees, you'll find that USDT is trading around 77 or 78 rupees, which is like close to 5 to 6% premium on the price, right? So limited supply and higher demand creates this difference in the price. And then this price difference, which is in USDT, it gets translated into the price difference on other cryptocurrencies as well. So if you compare then Bitcoin to the international market, you will see that Bitcoin will be trading at a 5 to 6% premium. That is only because USDT in in the Indian market is trading on a slightly higher premium because of low supply and higher demand. So I hope that answers your question, and we'll move on to the next one quickly. Hmm. So the next question is by Nilesh, and that is around how to keep security level in mobile, laptop for protecting our crypto. That is a really great question, really good question. So on your mobile devices, on your laptop devices, right? Do make sure that never to access any a phishing link or any random website, right? If possible, if you're if you are holding a large sum of cryptocurrency, or if you are invested quite heavily in crypto, right? And when I say heavily, for some people even 10,000 rupees can be a very heavy amount. For some people even 1 lakh rupees can be a heavy amount. For some it can be 10 lakh rupees, for some it can be 10 crore rupees, right? So whenever you feel that you are holding a very substantial amount of cryptocurrency, right, if possible, do get a separate device, be it a mobile phone, be it a laptop, be it a hardware wallet. Do get a separate device to store that crypto, so that what tends to happen is, say for example, we are using our personal laptop or our personal mobile phone for storing our crypto. Even though we think about security, but what tends to happen is that we keep on moving, or by mistake, or maybe by getting influenced, right? We end up visiting or clicking on any link just out of curiosity to see where these links will lead us to, right? And that is a practice that you should avoid when it comes to your crypto storage, right? You should never access any link that you do not know about, you are unfamiliar about. Do not access any unknown websites, because once your device is targeted or affected, right, they can the malicious actors or the nefarious actors can gain access to your mobile device or your laptop device and drain out any crypto that you hold in your wallet, in your mobile phone or in your laptop, right? So do make sure to avoid such curiosity to explore links or explore internet when it comes to you are holding any precious amount or any significant amount in cryptocurrency on your mobile phone or on your laptop devices. If possible, if you think that you are holding a very big amount, then the best practice states or says that you should uh, have a dedicated or a separate device for you to store your cryptocurrencies. Now, moving on to the next one. So I'm just gonna combine these two questions into one and answer them in one go. Which is, it'll be really helpful if you could talk about crypto or trading in pairs. That is Ethereum slash BTC instead of Ethereum USDT, uh, and so forth and so on. So if if you are using CoinDCX Go, for all of those who are here on the session, right, or who will be seeing this session in the future, if you are using CoinDCX Go, then you deposit INR, right? And with that INR, you buy Ethereum, Bitcoin, or whichever cryptocurrency. This pairing, right? This is what is called Ethereum INR or Bitcoin INR pairing. Okay, pairing is nothing but it is the main, like, pairing is nothing but the exchange of currencies which are taking place on a particular market or on that particular trade. Okay, what all currencies are being exchanged to carry out a particular trade in the market, that is what is called a pair. Okay, for example, you are giving out INR and you are getting Bitcoin, then this trade was carried out on a BTC INR pair. Okay, if you gave USDT and you got Ethereum back, right, then this trade was carried out on Ethereum USDT pair. Okay, now these are very simple, right? Giving out INR and getting Bitcoin, it's what most of the people do just to make things convenient. But you can also give out your Bitcoin and directly get Ethereum back in return for that. Or you can give Ethereum and directly get Bitcoin back in return of that. So these markets will be called BTC Ethereum pair or Ethereum slash BTC pair. The first cryptocurrency in this pairing, say for example, BTC slash Ethereum, right? In this pair, what it means that BTC is the front runner, it's the front runner, and Ethereum is the underlying asset, right? You will be holding Ethereum and you will be buying Bitcoin in exchange to your Ethereum, right? So it is possible to make gains or profits on these market as well, uh, because every cryptocurrency, right, it has some sort of evaluation against Bitcoin. Okay, you can go to Coin Market Cap and you can check out Bitcoin valuation of any particular cryptocurrency, right? So every cryptocurrency trades against Bitcoin with a certain value, up and down, up and down, up and down, right? So you can trade on that, and you can make gains, and that goes for any pair, right? As long as the an exchange supports that pair, you will be able to make gains on that. So this is what trading in pairs means, right? Then I guess we are done with the past, all the questions that we have received so far on the previous sessions. Now I'll quickly jump on to our live chat here, since you guys have been waiting so far, so since quite a long time, and you have shared so many questions. So let me just pick up all the questions that we have received in the session today, and then we'll quickly wrap this up. And I'll just start from the top. So just give me a while here. So Sagar has asked, Bitcoin liya kya? So yes, Sagar, definitely. That's our tagline, right? Bitcoin liya kya? वो सब तो ठीक है पर Bitcoin लिया क्या? So yes, definitely. Shivam is asking, please can you reply why INR exchange has been removed from CoinDCX? Well, Shivam, INR pairs are available. You can just go to our spot market and INR pairs and all the cryptocurrencies which gets traded into INR directly. It is available as well, right? And you can definitely explore or check out our Insta product as well on our CoinDCX Pro website, which has quite a list of the cryptocurrencies which are available to trade directly through an INR on our platform. You can buy and sell instantly with just a click, right? You don't have to get into order books and limit orders if you're trading on Insta. So do definitely check that out. It is definitely available. And if there's any error or any issue that you're facing while accessing that, please just raise a support ticket and let our team know, and we will check that for you. Amit Raj is asking, how does rates high and become low? How does rate become high and then they become low? So Amit Raj, any asset in the on this entire planet which gets traded on the financial market, right? Anything goes through up and down, right? Some people might be willing to pay, premium on that if they see too much value in it, right? And some people might not be willing to pay a price on that particular thing, right? Because they don't see any demand or uh, any future outlook for that particular asset. Any commodity or any asset uh, goes through this price discovery of ups and downs till the time the market comes to a conclusion that, hey, this is the median price where we all agree upon, and this is what the price stays, right? And when we talk about commodities or assets, right, you'll need to understand, you'll need to go back to the thing that I talked about in the beginning, right, about the future of cryptocurrency. And in order to understand that, you have to know why cryptocurrencies has been created in the first place, or why this infrastructure is being created in the first place, right? Any commodity or any asset in the time in the world that we live in, right, it has this inflationary nature attached to it, wherein the price will keep on increasing over the time, because the money supply keeps on increasing over the time, right? So is true for gold, so is true for oil, so is true for land, so is true for gold, any asset in the market, for fiat as well, right? Even the fiat currencies, right? The dollar keeps on increasing in the value over a period of time, as against to INR, right? So anything and everything in this market, it goes through this entire movement of being going up and down, in order to come to a conclusive decision of a moderate price for that era or that duration. And that totally depends on the like the demand and supply for that particular asset, for any particular asset in the given time frame or the duration. Boulder Dash is asking, explain futures trading. So futures trading in general, right? What it means is that uh, when you are placing your trade, right? What you do right now on the spot market is you have bought your cryptocurrency, and that's it. You can hold it forever, right? You can hold it forever for as many years as to come. On futures trading, whatever bet or whatever investment that you make, right, since you are trading on the derivative of that particular asset, not the underlying asset in actual, right, your trade will be binded with a contract, and that contract will be time specific. Say for example, in futures, what will happen is that you will have a couple of contracts wherein it will tell you, this contract will end on 31st of August. Another contract B will end in December 2021. Then there is another third contract which will end in the month of March 2022. So any contract that you will pick, depending on when it is ending, what you are basically trading upon or betting upon is that what will be the price of that particular crypto, say for example Bitcoin, in the month of August, in the month of December, or in the month of March 2022, right? So the futures trading is you betting on a future price of any particular cryptocurrency, depending on the contract that you are choosing. That is what future trading is. Apart from the fact that yes, you can take leverage, you can borrow funds from the exchange, and you can open a leveraged position on that. But if you are taking a leverage on your position, be it on margin trade or be it on futures trade, do make sure or do understand that whatever profit, like the possibility of making profit, whatever that it is, right, the same possibility lies in terms of making losses as well. If the gains are higher, so as the losses. Vishal Wani has asked, how to judge the coin rate will increase. So uh, that constitutes multiple factors, right? And for that, you'll definitely need to check out the previous 7 sessions, because we have covered that in detail. I'll not be able to, just I can share the pointers, but I'll not be able to cover that in detail. We have covered that in detail in the last 7 sessions. So do check out all the sessions, and trust me, you will not regret checking out any session, because every piece of information will be very crucial for you. You'll need to identify, first of all, the fundamentals of that particular coin. Okay, how strong their team is, what is the community activity looks like, what is the developers activity looks like on that particular coin, and what are the goals that they are setting up, and how practical or feasible those goals looks like. That's These 4 or 5 things are just one. This is the one factor. Second factor is you need to analyze the price chart. And by price chart analysis, I mean you'll need to look into the past history or the past price trend of that particular cryptocurrency, right? How much it has moved, when did it move, how much gain it gave, how much loss it gave in the bear market, when did the bear market started, how the bull run started, what was the other market were looking like when that was happening, and so forth and so on. Taking that into consideration, and last but not the least, the USDT, or mostly the stable coin supply in the market, right? You will be able to identify when, if not when, how the coin will increase in the price in the future. Hemant Kumar is saying few are telling its future currency, but why it's change price daily and fluctuation on price. Original currency 100 will not change it. Original currency, as in original Indian rupee, which is 100 rupees, will not change it. So Hemant, one Bitcoin, similarly to 100 INR, that 100 INR is 100 INR for you, right? Similarly, one Bitcoin doesn't change. If you have one Bitcoin with you today, tomorrow as well, it will be one Bitcoin. Day after tomorrow as well, it will be one Bitcoin, and so forth and so on in the future. But the price of even your 100 INR, it keeps on changing every day. It keeps on changing against the US dollar, or it keeps on changing against the gold, or it keeps on changing against the oil in the market, the assets which are precious in the market, right? It keeps on changing on a daily basis. Yes, the change in the percentage is quite low, like it can be 0.01%, 0.1%, but that is not fair to say that it doesn't change. It changes, and so forth, so on. The trend that we have seen is that the currency is losing value since its inception, right? There was a time when in one to get $1 you only had to spend 40 rupees. Now there is a time wherein to get $1 you have to spend 73 rupees. And while you can say that okay, it is losing value against dollar, but that doesn't matter to you or to any of us, but that's not true, because the trade, like everything is globally connected in today's market, right? And the trade in the market, in the global market, takes place in terms of dollar. Dollar is the predominant currency in the market, right? When we have to buy oil, right, we have to pay in dollar. The government has to pay in dollars, right? Then that's how they export oil from the international market. When they have to export certain goods, or the cell phones that you are using, right? When it has to be exported from China or from wherever it is being manufactured, right? Or even if it is assembled in India, those components, those basic components or raw material, when it has to be exported from the international market, the merchant, the businessman, or the government has to pay in dollars, right? So if INR is losing value against dollar, right, that means the price of whatever thing you are exporting from the international market is keep on increasing. So is Bitcoin, right? Bitcoin is not losing value, or it is not changing price, right? One Bitcoin is one Bitcoin in that sense, whatever the scenario you are referring to, okay? Is just that either the dollar is strengthening against Bitcoin, okay, that means you will see Bitcoin's value going down, or the dollar is losing value against Bitcoin. That is when you see the Bitcoin's price going up, right? So it's more or less on that sense. And to understand this concept deeply, you will have to understand the basics of money, especially the fiat money, how it works, and you will have the answer to this. Nishir is asking, if my goal is to exit at 60% profit, will it affect the profit I earn in the future, as current price of that coin is at 60% profit from its previous price? No, or it may be. It so since you are talking in terms of percentage, right? And I'm really glad that you are talking in terms of percentage. Whatever gains you will make on whatever amount you are investing, it will always be in terms of percentage. You have invested 1 lakh rupees, you converted it to 2 lakh rupees. That is 100% gain on that portfolio of 2 lakh, from 1 lakh to 2 lakh, right? Now, even if you have closed the trade, okay, and you got another opportunity to get into the market, you invest that 2 lakh rupees. When you will make 100% gain on that, you will be making 100% gain on 2 lakh rupees, and that will translate into 4 lakh rupees. Any price change in the market, it happens in terms of percentage. Yes, if you are at a 60% profit, right, and that if you book your profit right now, but the currency end up going to 90% gain, like increases 30% more, right, your total gain would have been 90%, but there is no magic wand to say that it will increase 30%, right? Your portfolio or that particular cryptocurrency can retrace by 30%, right? In order to avoid this dilemma of when to sell, whether to sell or not to sell, it is always best to pre-calculate your trades, and whenever you are placing any trades, calculate in terms of percentage gain, right? You invest 1 lakh rupees, you have made a 60% profit, well and good. Now 1 lakh 60,000 becomes your principal amount. When you'll reinvest it again in the market and you gain a 60% gain on that, right, then 60% of that will be that will take your portfolio amount close to 252,000 rupees, right? So after a 60% gain on that amount, you will end up gaining 250,000 rupees, and so forth and so on. So always calculate the gains in terms of percentage, and that will help you avoid this dilemma of, whether I sell it at 60% and wait till 90 or whatever. Because any crypto asset it is, even if you have sold it, say for example, you bought Bitcoin at 30,000 or 10,000, right? You bought Bitcoin at 10,000, you sold Bitcoin at 40,000, right? You made 300% gain and you sold Bitcoin at 40,000. Bitcoin then ended up going to 60,000. Yes, you did miss on this gain from 40 to 60, right? But your principal amount has already increased since you have capitalized on that profit. Now Bitcoin has retraced from 60,000 to 30,000, right? You want to capitalize again, you reinvest your amount at 30,000 or even at 40,000, right? So, and a market will always give you an opportunity right after the dump. You can take opportunity, like that is whenever a huge dump has happened in the market, you can take that opportunity and use it for your own good in the market, and then multiply your capital through percentage gains in the market. Again, Nishir has asked, what are different methods to earn passive income from cryptocurrency? So either you can stake your cryptocurrency. Staking is a very popular passive income generation method in cryptocurrency. Either you can stake it, and yes, you can stake it on our CoinDCX Pro exchange as well. You can just go to our CoinDCX Pro website and check out the staking option. Or you can lend your cryptocurrency. Somebody will borrow your cryptocurrency from you. You can lend it on our exchange, CoinDCX. You can lend it to CoinDCX exchange. We will borrow the cryptocurrency from you. We have a list of certain cryptocurrencies that we borrow, and we use that funds to provide to provide margin on our margin trading platform. So you can check out the lending section. You can check out what all annual percentage annual interest you will gain on that. And these are the two very popular ways to gain passive income, either through staking or through lending. Boulder Dash is asking, what do you think of the present market scenario? Will it be bullish or bearish as the volumes are quite low? So in the locked, and I'm not like being funny about it or hysterical about it, but this is something that you guys might have heard quite a lot, be it any influencer or any personality you listen to, that in a long term, like this is the phrase, right? In a long term, it is all bullish. In a long term, it is all good. right? In a long term, it's gonna be better, it's gonna be good, it's gonna give you higher returns, or it's gonna be a positive outlook, right? But whatever that long term is, right, be it 2 years long, 3 years long, 4 years long, 5 years long, the trajectory is not going to be like this. Like, it's not going to be, straight up, right? The market will move up, then it'll correct, then it'll go up, then it'll correct, then it'll go up, then it'll correct, and so forth and so on. And this is what is healthy for any asset, for any market to move in this, with this particular momentum, right? Gain some, then lose some, then gain some, then lose some, and so forth and so on, right? So this is called healthy movement, healthy correction in the market. So we have had like 1,000% plus gain in the in the market in the last 1 year in itself. Like some some currencies have given 1,000%, 2,000%, 3,000%, even 4,000 plus percent gains, right? And after such an exponential move, it is always healthy to get a good correction of looking at the past trends of cryptocurrency industry in general. 60 to 70% correction is considered as good, so that we are ready for the next leg up, right? So bullish or bearish, if I just have to share my personal view, and this is not an investment advice, okay, please do not take this as an investment advice. Bearish in a short term, but bullish in a long term. Inayat Patan is saying some YouTubers say do not store in exchanges, store in their own wallet. What is saying about? So Inayat, maybe you joined late, but it's all about not your keys, not your crypto. It's all about storing and owning your cryptocurrency asset, making it on or your own, like, so that you have the control, the entire, like, the control over your cryptocurrencies. And if you are holding a very large sum of cryptocurrencies, right, it is always advisable, or it is highly, like, the best practice, what the best practice in the industry suggests is that you should hold it or store it in your own private wallet. Every cryptocurrency, every blockchain gives you an ability to download the native wallet, native blockchain wallet. You can download the native Bitcoin wallet, Ethereum wallet, Polkadot wallet, and so forth and so on. So it is considered as a healthy practice, or the best practice, to save your cryptocurrencies in those native wallets, the control of which lies with you. And if you are doing that, do make sure that you do store or retrieve your private keys and keep that very, very, very safe. If you store cryptocurrency on your own private wallet and you do not save or store your private keys, and if you lose your wallet access, then you will lose your cryptocurrencies. So there are risks attached to this particular practice as well. If you're not comfortable with that, then the best practice is, like, the best thing that we can advise is that, go ahead with reliable and reliable exchanges like CoinDCX, because at CoinDCX, most of the funds that we have on our platform are custodied by BitGo, right? BitGo is the leading custodian in the cryptocurrency market. So all the funds are custodied by them, and it is stored very securely in a cold wallet. So if you're not comfortable with the keeping your funds in your own wallet, then do your due diligence, and save your crypto. Do not save your crypto or store your crypto on any random exchange, is what I will say. Vishal Kohli is asking, so what is your take on decentralized autonomous organizations, DAO? So, for those of you who don't know, DAO is a very popular concept in cryptocurrency. What it means, It stands for decentralized autonomous organization. So, so far, in as per the traditional infrastructure or the traditional society that we have, experienced or learned from so far, what we have seen is that for any project or any product in that comes in the market, there is a company behind it. There is a centralized organization, right? And that company, that organization has certain parameters, or some ethics, ethos, or some rules, guidelines, policy. But whatever that may be, it is a centralized structure. At the top of that, there is a CEO or there is a co-founder that sits on top of the entire structure, that governs the entire company or the organization, or controls the entire company or organization, right? In the blockchain industry, there is a very popular concept called decentralized autonomous organization, which is, there is no founder or there is no CEO or that controlling centralized person or entity that controls the functioning of the organization or the company, right? The company or the organization works in a decentralized way wherein anybody can connect with that organization or with that network. I can connect, you can connect, anybody else can connect, and all the people can start contributing to that particular organization or to that particular project or product. The way it is governed, so that I don't make a mistake, you don't make a mistake, or not everybody starts doing their own thing, is baked into the blockchain or the network of that particular DAO or that organization. Because blockchain is just a code, so conditions can be pre-coded in the network, right? And this is how DAO works, basically, more or less. And DAO is a very pretty interesting concept, and it is flourishing. It is quite interesting to see, it is flourishing, and it has a very progressive outlook going forward as well. And that is one space or one category to watch out for in the blockchain and the cryptocurrency market. Priyanka Gupta is asking, till how much time we have to hold crypto? Priyanka, the short answer is, or very simple answer is, till the time you make profit. I think that's what you are looking for, right? Because you are investing for a purpose to grow your portfolio or to grow your investment, right? So, as I mentioned again and again, time and again, like, pre-plan your exit. Before getting into the market, you have to pre-plan your exit, that this is what I'm looking to get out of it, right? If you are just in the market for speculation and investment purpose to grow your portfolio, then you need to pre-plan it, that okay, whatever amount I'm getting into the market with, be it 100,000, 200,000, 300,000 INR, like 1 lakh rupees, 2 lakh rupees, 3 lakh rupees, once it has reached a certain amount, once it has grown up to a certain amount, you should go ahead and sell out your investment and book your profit, because that is what your goal was. So you should hold it. Okay. All right. Yeah, I think that's more or less. Hemant is asking, after mining 21 Bitcoin, what will be a price? It will constant or change in price, and when CoinDCX launch their own core token, like WazirX token. So as of now, I don't have any updates on the launch of our or of DCX token, but we will definitely keep you posted through announcement on that. And after mining 21 million Bitcoin, the way it will work, the way mining will work is that miners will get paid for the through the transaction fees. So whenever you send Bitcoin from one place to another, a certain fees is charged, and that is what will goes to the miner. In terms of the price, again, you are missing out the point, Hemant. Okay. And the point is, Bitcoin is not losing the value. Okay. Bitcoin is one Bitcoin. Okay. It is the dollar which is either gaining the strength against Bitcoin or losing its value against the Bitcoin. Okay, that is what the point is. And I will really request you to jump into, the basics of money. Check out the basics of money, check out the basics of fiat money, check out what central banking is, how it works, how institution works, how bank works, and everything like that. Check out how money and currency works, and you will understand why Bitcoin is created in the first place and what purpose is it serving. You will have the answer to that. So that's all for today. Thank you guys for joining in, and we will wrap up this session here only. And thanks for joining. This entire 8 weeks have been really good, and it was really great to connect with all of you and sharing the information and talk to you and answer all of your queries. We'll come back soon with a revamped series with a new theme, with a new session, which we will host every week going forward, depending on your demand. So let's see you soon. Take care and have a great weekend, guys. Thank you for joining in.